Welcome to the Real Estate Way to Wealth and Freedom podcast with Jacob Ayers, providing actionable content to help you along your journey to financial freedom through real estate investing. As the premier asset class, real estate has helped ordinary people just like you amass fortunes. The benefits of passive income from real estate investing will allow you to live a life you want. And now your host, entrepreneur, real estate investor, and apartment deal syndicator, Jacob Ayers.
Hi, and welcome to the Real Estate Way to Wealth and Freedom podcast, episode 103. Today, our guest is James Kandasamy. James is an award-winning multifamily deal syndicator and has sponsored the acquisition of over 800 units, predominantly in Central Texas. Well, today I welcome on the show James. James, thanks so much for joining us.
Hey, Jacob, thanks for having me on the show. Really happy to be here.
James, it's our pleasure. Well, hey, James, for the audience members that might not know you, could you tell us a little bit about yourself and how you got started investing in real estate?
Well, I'm an electrical engineer who has an MBA. I mean, that's what my past was whatever I've studied for. But now I'm a full-time real estate investor / syndicator. We basically raise money from private investors to find, manage, and rehab value-add multifamily in Central Texas area. And our primary focus is to give higher than average returns to our passive investors by investing in value-add multifamily. That's what we do. We focus a lot on Class B and C, and we always look for that value-add component. I don't see a point of buying just the normal priced market rate properties, not in real estate. We always look for value-add, as I mentioned, and we do very well in it to turn around the properties.
Yeah, awesome, James. Well, hey, let's dig into your background a little bit. You mentioned you have an electrical engineering background with an MBA. Why did you transition into real estate at one point? At one point, I'm assuming you were an electrical engineer working in the engineering industry and then made this transition into real estate investor. So take us through that journey.
Absolutely. I mean, as usual, our understanding is to grow up, study and go to work, right? That's what I do. But, as you work and at one point when I did my MBA, I realized that I always had the understanding of engineers are the smartest guy. Whenever I've been with my engineering group, we thought we are the smartest guy. The rest of the world is okay. We are doing very well. We solve problems. And until I went to my MBA school and I realized, oh my God, we are smart, but there are a lot more smarter guys who makes a lot more money than us. And we are like completely under the shell here without knowing what's happening in the financial engineering side of it, right? So I realized after doing my MBA, there's a lot more money that's being made by other people in the business world. And I was looking for what is my business, what am I going to do as a business? Because I want to do something, because I know in business you have unlimited wealth creation that can be done by anybody, right? So so I was trying a lot of businesses. We did online education. We were trying to, let me think what else I did. Of course I was working and I did my online education. I think I tried a few other business, which I can't really remember, but I tried a few other things and nothing really stick to me. And I also tried to break the code of stock market. As engineers, we like to say, hey, let me beat that puzzle. But I also realized stock market is a big game played by the big players. The small players need to be there for the long run. You can't do day trading. And I was trying to do day trading. And I think the stock market, it controls a lot on fear and greed. And I just didn't have a peace of mind in the stock market. So I gave up on it after trying to decode how to beat the stock market. So
I completely understand that.
I'm just not good at stocks. There may be a lot of people who are really good at stocks and making a lot of money. So I looked at rentals in the multifamily, and that's where I started doing the calculation. If I buy a rental in Austin, that price 5 years ago was like, you can find deals at 100,000 for rental. And I calculated, just buy a rental, and if you put in a normal loan, you'll get at least 9% return after everything, all the expenses are minus off. So 9% return is really good, on a single family home, right? So that's why I got started on a single family, and later on moved on to multifamily.
Yeah, well, take us through that journey, James. So you're an engineer in your career, and then you decide, well, you're trying to figure out how to build a business after MBA school, and you realize that stocks, bonds, that's not really your forte. You have, like you said, you really have to be committed and, almost be a day trader, and you're not going to produce the results like the people who are full-time in it. So you decide to buy a single family, it sounds. So take us through your investing journey from there.
So we started with single family. I mean, first I was looking in Austin, and I realized I need to put in down payment of like what, 30,000-40,000 for a house. And somebody told me, hey, San Antonio is cheaper. Why not you buy there? I said, and when I told him San Antonio is 1.5 hours away, and when that person told me blindly, hey, if you're making $40,000 in equity, why you don't care about driving 1.5 hour drive? Then I realized, oh my God, I'm being lazy here, right? So that it's true. I mean, a lot of people do not want to work hard, right? And I was in that situation. So I said, okay, so I have this amount of money. I think I had like $50,000 just to get started. Even that is from my house equity. And I was thinking, how do I scale this up very quickly? And I realized if I want to buy in Austin, I probably will buy one or two houses. And I said in San Antonio, I probably can buy like 5 to 6 houses. So I looked at San Antonio. The cash flow is good in San Antonio. It doesn't appreciate as much as Austin, but you can find houses much cheaper, and it's easier to find houses just because there's a lot more inventory, right? So, but I think the revelation is basically you can always find deals a bit further from your backyard, right? If you don't mind driving 1 or 2 hours or 3 hours, which I do right now, if you work hard, you should be able to find deals and scale your wealth. Because in real estate, it's, you have the control, and it's a lot more, it's less work than a lot of other business, because you can buy it and rent it and, slowly rehab it. And it's a slower process of wealth generation. So we started buying one by one. We went up to like 11 rentals, and we did 2 more flips. And we gave up on the flips, because one of the flips I made like 50,000. The other flip, I think I lost like $1,000. And I said, this is just too much work for the money that you're getting. And I start focusing on rentals. So we went from 1 to 11 rentals. Right now, we own only 4 of those. We start selling those. But after that 1 to 11 rentals, we start refining out our equity. We use something called a double closing strategy, where you buy, rehab, reposition, and refinance and rent, right? So we start taking out all that equity, like 400 over 1,000 in that 11 houses, and we start buying our first multifamily deal. So that's where I moved from single family to multifamily.
Yeah, awesome, James. Well, a couple things to touch on there, and I think an important lesson to take away from your experience up to this point is sometimes you have to go outside of your market to find deals or find, a deal that fits your investing criteria. So, I like to say, follow money, don't make money follow you. And that's what you've done. You're investing in Austin. You realized, hey, you could speed up the velocity of your money by investing outside of your market, just 1.5 short hours away down the road in San Antonio. So yeah, really important lesson there. So you take your money and start building up your portfolio in the neighboring city in San Antonio. And then you grow it up to, a sizable interest. And a cool point you're doing here is you're refinancing out your equity to grow your portfolio. So for the listeners that maybe aren't familiar with that strategy, can you kind of walk us through what that refinance process looks like?
So on this, there's 2 types of refinance. I'm going to talk about single family first. Later, we can talk about multifamily. So
okay,
the refinance, let me talk about the entire strategy of this double closing, which I don't know why it's not being discussed very widely, but let me go through that in a bit more detail, because it's a very, very powerful single family strategy, but everybody's just buying the normal house, buying a normal loan, right? So double closing strategy means that you buy a house that needs work. So there is an indicator called after repair value. So when you look at a distressed property, distress means can be the seller's distress due to his personal situation, or the mortgage is due, going through a divorce, or is going through bankrupt, or he just don't have time to take care of that property, right? So basically, a house value drops when nobody takes care of it, or when a distress situation happens. So let's say your house value is 50% or 70% of ARV. ARV is after repair value. That means after repair means actually after you solve the problem, either rehab the property, or after you solve the seller's problem, you can get 100%, right? Right now, let's say you're buying it at 50 to 60%. So when you do a double close, basically you are buying it at 50 or 60%, and then but you buy it with the hard money lender, right? Or with some hard money, or with some private money where you buy. That's the first closing. When you buy with the hard money, you basically buy the property at that price, 50 to 60% of ARV. Plus, the hard money guys also will give you the rehab money, right? So now maybe it goes to 70% of ARV after you put in all that, right? So, but once you fix it up, the property is valued 100%. But you only put in 70% of your money into the deal, right? So that's the first closing, and you have rehabbed it. So now the house is suitable for the normal conventional 30-year mortgage offered to any house owners by Fannie Mae. But the Fannie Mae gives you 75% of valuation for rental property. So now you have a 5% difference. So a lot of money is returned to you back on the second refi with Fannie Mae. So basically, your original down payment for the hard money or the first closing could be like 20,000, but because of that 5% being given back by the second refi, you basically reducing that 20,000 to probably like 8-9,000. So that's what I call double closing. You have a first closing on a hard money lender or private money, second closing on a normal Fannie Mae, and then you start renting as a normal house. So that's how we build that 400,000 equity with that strategy. And in the last 6 houses, I mean, we had like 11 houses, 5 houses we paid like I think maybe like 10,000 a house. But the last 6 houses we didn't pay anything. In fact, the second refi, eaten up all the money that was put in the beginning when we put the first financing. It gave us back all the money back. So basically, it was zero cash out of pocket for the last 6 houses.
Yeah, well, that's an interesting strategy, James, and one that many beginning investors can use to really speed up their investing ability to, pull out that equity and then roll into the next deal and the next one like you did. So yeah,
Correct.
Really interesting stuff there.
Correct. Yeah, I mean, we build up, as I said, we build up 400,000 equity in 2 years. So it's a lot of cash if you're willing to work hard, right? And of course, it's not like these houses it's not like any houses in San Antonio is easily to be able to be found by anybody. You have to use your off-market strategies, which mean you have to use yellow letter marketing or cold calling or texting to find all these deals, find directly from the sellers, and then from there you basically buy it directly from them. That's where you get really good deals. I mean, you can't buy it on MLS or from any realtors. Most of the deals are highly priced, right?
Yeah, right.
By buying that in that way, you can get really good deals and you can do this strategy.
Yeah. Well, James, can you start talking about how you transitioned into the multifamily space after you built up this portfolio of single family properties?
So yeah, once I have that 11 properties, I realized that there's an issue with the scaling, right? So Fannie Mae only allows you up to 10 units, 10 property, and I want to grow more because we already have 11 houses, right? And how do you grow more? So we said, hey, okay, now we have to do multifamily because we have a limitation on the loan. We have to do a blanket loan or portfolio loan with a commercial bank, and it's just a lot of work with single family, right? Talking to all the tenants, renewing different insurance premiums at different time. Tax at the end, but tax is all at one time, right? We pay all at one, but different time of of insurance, collecting rents. I mean, rents all we did online, but still it's a lot of work. And then we said, let's do multifamily. Let's go to the bigger space. So we start taking that equity and applying the same philosophy of finding off-market deals by yellow letter, cold calling, texting to the multifamily space, and we start trying that out. And finally we got one guy who said, hey, why not you look at this one of my deals one of my friends' deal. This was a partners who bought a deal, and the property management company didn't do a good job, and they're frustrated. They are land developers; they're not really multifamily guys. So they were trying to really get rid of this deal. And I was able to get under contract on that deal.
Yeah, awesome. So, James, you're experiencing a couple of these problems that many real estate investors eventually realize. You're hitting some ceilings, such as the 10 loan limit by Fannie Mae, Freddie Mac requirements. You're realizing that investing in single family properties isn't exactly the most scalable, and it's a lot of work, for the bang for your buck. So you start looking at the multifamily space, and you've got a connection to look at a multifamily property. So take us through the mindset shift that you were looking at transitioning from these single families to multifamily. Sometimes people have a little bit of a limiting mindset, or maybe a little bit of fear transitioning into such bigger properties. So what was going through your mind, and what was your philosophy at that time?
Well, I mean, well, one is mine. The other thing is analytical thinking, right? So as an engineer, I start analyzing why people are buying multifamily. It doesn't make sense because the returns are lower, right? Single family gives you, my single family was doing 30 to 50% return because I'm buying it at a good deal. I'm putting such a little money. Maybe on average, I think my deals, I only put like 6,000 a door for that 11 houses, right? Even though the last six was free, and the earlier, if you average out, like, so my cash and cash was almost 50% on my single family. Then I was wondering, why are we buying multifamily when the cash and cash is like 10% or 12% at that time, 3 to 5 years ago. And when I did my analysis, I was really trying to find out why, because nobody can really explain it well. I did ask a few people just do not know. They say multifamily is scalable. Yeah, but why? Well, I can just continue doing the single family, right? So what I found out after a few days of analyzing it, I say, okay, the only reason I would do multifamily is the power of force appreciation, which means you can refi out your money completely out after forcing the appreciation, which does not exist in single family, right? Single family is all by comp. You can build a palace in a neighborhood. At the end, your houses surrounding your palace is the one that's going to determine your palace price, right? But in multifamily is different. You can push, if you can work hard and push the NOI or the net operating income of that multifamily, you can double or triple of whatever value that you bought, and compared to all the property surrounding it is all based on NOI. So, and you're able to refi out your cash, and once you refi your cash, you can invest it somewhere else. So you can basically multiply that money very quickly. So the power of force appreciation is what allowed me to think, let's go multifamily, right? I don't believe in buying multifamily and keeping it letting cash flow, because I think you can get much higher cash flow on single family. But if you can buy a value add multifamily and force appreciate, that will be very, very powerful.
Yeah, really interesting stuff there, James. And I wanted to dig into your background and understand, how you got started, why you got started, and how you've made this transition into multifamily. Because sometimes for audience members out there who are just thinking about getting started, or maybe have a few units under their belt, it kind of seems so far off to think, well, one day I'll be like James and I'll own 800 units in Central Texas, right? It seems so unrelatable. But at one point in time, you were that person just getting started. You were that person with one house, and then two houses, and the next and the next. And next thing you know, you've grown your portfolio to quite sizable size. So yeah, it's just interesting to hear your path and your story and your point and your progress up to this point.
Mm-hmm. Yeah, I mean, I got a mentor to help me out. In fact, I got two mentors. One is from New York, one is locally. Both gave different perspective of the business. One gave me the fundamentals understanding of multifamily and property management, whereas the other one from New York gave me a lot about off-market deals and how to analyze markets, how to find pockets of opportunity in commercial real estate. So I got a mentor to help me out and change my thoughts process in getting into multifamily and how to teach it. But I think anybody who want to move from single family to multifamily need to be starting to think big. A lot of people who are in single family and want to go to multifamily, they have the desire, but they really don't have the desire. What I mean is, yeah, they want to do multifamily, but they really do not want to do it. So they are not really serious. I mean, your audience will know. Are you really serious in a multifamily? If you're serious, you have to wake up very early in the morning and work hard. You have to overwork everybody. If you're not doing it, you are not really serious, right? I mean, you know yourself. If you look at me, I used to wake up at 4:30 in the morning every day because I used to have a full-time job. I have to wake up 4:30 in the morning. I work and I go to work and come back. And even while working full-time, I bought like 340 units. So if you guys are not working that hard, you are not really serious. So just to be honest, it's, it's not only a mindset shift, it's a mindset shift plus you have to work really, really hard. And that's what it's need, right? You have to outwork everybody and you have to work really, really hard. You have to do things differently from everybody else. And get a mentor because mentor would avoid a lot of mistakes that you're going to be doing if you're on your own.
Yeah, James, that's an interesting point you bring up because there's only so much that the mindset shift will do for you. You can wake up every morning and study real estate, read books, and listen to podcasts, and that's all good stuff. But at some point, you've got to actually start doing, right? So, yeah, it's an interesting balance and one that I kind of struggle with occasionally, and that is I've kind of coined this term, the learn-do ratio. And, finding that equal balance it's different for everyone and, trying to find what works for me and, still working through that. So, yeah, another interesting point you bring up.
Yeah, frankly speaking, there's a lot of newbies who come and talk to me. How do you get started? How do you get started? I say, okay, what are you doing now? So, from the way they talk, they're not really doing things. As I said, people want to do multifamily. People know that people are making big bucks, and you see all these highly successful guys, but nobody really see how much hard work is behind all these guys. There's a lot of hard work behind all these guys, and if you want to be like them, you have to work really, really hard. And that's what I gave you some parameters, right? You have to work really early, you have to work late, and you have to, do things that other people don't do, and that's how you get your first deal done, right? Get a deal, because nowadays it's really, really hard to find deals, especially for newbies. And if you look at my path, I chose to send like 1,000 letters to different sellers. I get all my kids to work to fold letters, and every weekend we used to fold. And your audience know they're not doing any of those, so there's no real surprise why they're not successful.
Yeah, sure. Well, James, I think a real important factor in this working hard mindset is, what's driving you, what are your goals, and really identifying those. Because if you don't have an important reason why, or you don't have like a clearly defined goal, then it really is hard to wake up early every morning and, grind and, look for deals, analyze deals, make connections, network, do all the stuff that's required to be a successful real estate investor. So, to me, I always preach and practice, identifying your reasons why and setting and writing down goals every day. So what are some tips you have around that, and what's your personal mindset?
Absolutely. You are right. You have to look for what's your why. And for me, it's like, okay, yeah, now I moved from Malaysia to here, right? So, I know working is good, but it's not going to be able to fund my kids' education, for example. Education costs in the US is really expensive compared to other parts of the world. And when I got to know how much it's going to cost for my 3 kids' education, I realized, oh my God, I can't work this W-2 job. So I was thinking, I need to do something else, right? So that was what my primary why, because I need to make sure that I have that freedom to give the resources that my kids need, right? And all the time that you need, right? With money, you will have the time. And at the end of the day, you come to this world, what are you going to leave your legacy, right? Are you just going to come and study, get married, and work? Work and get married and have kids and die. That's like boring, right? What's the point of living like that? So I always think about, how do I make an impact in the world? How can I be happy when I die, right? How do you make an impact in other people's life? How do you make other people's happy, right? So so I was looking for all that answers that is basically my personal my own journey, right, in life, right? So real estate is a tool, right? It's a tool that allows you to do all that. But it can be any tool, right? Real estate or stocks or any other investment or any business, right? But I think everybody has to realize that we have to leave a legacy you have to make an impact in this world since you were born in this world, right? There's no point of coming into the world and raising to be a teenager and going to school and working and having kids, and I mean getting married and having kids, right? So I always want to do something different in the world. So, and that's been my mission as well. And
Yeah, James, you're so right. And for those audience members listening in right now, really take these words to heart. James, you're so right in the fact that real estate is a tool. It's a vehicle to get you where you want and do things for you. And it allows you to, build a lifestyle that you want and will allow you some financial freedom to do good things in the world beyond just, growing up, getting an education, getting married, getting a job, and, living a, fairly middle of the road lifestyle. So yeah, really important things there.
yeah, absolutely. I mean, if you look at my real estate venture right now, I'm able to sponsor like 200 orphans for the education on a monthly basis. That's like super happy, right? I'm happy to do that. I mean, I couldn't do that if I'm working a W-2 job, right?
Oh,
So that's one of my indicator. I know everybody counts by number of units they have, and I have 800 units, but that's secondary to me. But my primary indicator is how many kids can I help in this world, right? Because I'm indicator driven, and that's a big thing for me, and I'm tracking that more closely than my number of units.
I love it.
Because
James.
that's
So cool there.
Yeah, that gives you, happiness, right? I mean, if you die today, yeah, you're happy because you made an impact on 200 kids, right? And since we are doing a lot of value add projects, I can see, how much jobs that you're creating. I mean, I realized in one of my single family, when I was doing rehab on single family, I mean, we usually have our own contractors, and I saw my contractor having a subcontractor, which is like a very old guy. This really old guy is working, and I was thinking, I was really providing job for this old guy, and he's happily working, and I'm just so happy that I'm able to create that opportunity, right? I mean, and that opportunity created by me, right? Me and my wife, right? So it's just so fulfilling to give back in that kind of manner, giving jobs, giving money for education, improving communities life. That is what's gonna stay with us when you die, right? It's not gonna be, yeah, I made how many millions of dollars, yeah, how many hundreds of units. All that doesn't count when you die, right? At the moment of dying, you'll be happy that you have made an impact to other people's life.
Yeah, James, I love the way you measure success for yourself. And that's how many lives you impact rather than how many units you had, how many dollars you made this year, how many acquisitions you've made this quarter, So really cool stuff. I think it's really important to keep those important reasons why at the forefront of your mind rather than, these day-to-day, real estate type related goals. So really cool stuff there.
Correct. Yeah, absolutely. And one tip for any of your audience, if you can't get a deal, start giving to some charities and then see whether you get a deal or not. I'm a believer that when you give, you get. So yeah, try that tips and see. Start contributing to a charity without any expectation, and work hard on your deal. I'm sure the law of karma will come and help you guys.
Yeah, I love it. Well, James, we've talked about how you got started, why you got started, a little bit about what you're doing now, and then why you're doing it. So, full cycle here. I think it's really going well. It's exciting to see, and I think it's really interesting to dig into your background and your past and all of that and just kind of understand your journey. So, really valuable stuff for the listeners to take away today. As we're wrapping up here, we've got a lightning round, just a series of questions we ask every guest. So we'd like to fire them at you and you just answer from the hip. How does that sound?
Sounds great. Go ahead.
Okay. Well, James, the first question is, what was your biggest hurdle getting started investing in real estate, and what'd you do to overcome that?
Mindset shift. As usual, as I said, real estate is a tool which allows me to discover myself. And I read a book called Magic of Thinking Big, and it talks about all about mindset shift. And after I start shifting my mindset, believing that I can go bigger, do much better deal, I start getting deals. So that was the biggest hurdle, your mindset, and that's the same hurdle that everybody has.
Yeah, I love it. Well, James, do you have a personal habit that contributes to your success?
personal habit, early morning wake up and doing my morning rituals like meditation, journaling, and visualization. I think that's very, very powerful in giving you a clarity on where you want to go. And also, it tunes your subconscious mind to attract success and important people to your life that enables you for your success.
Yeah, awesome. Great. Well, James, do you have an online resource you find valuable?
Online resource, that's interesting. So in multifamily space, there's a lot of Facebook group, which everybody created Facebook group. However, I do also realize Facebook group is just a social media thing, right? So somebody in any Facebook group asks about what is a cap rate, and everybody start answering. And after 2 weeks, there's another guy asking what's the cap rate, and
yeah, I know what you mean.
Nothing really archived and searchable, right? So I have created a multifamily forum, which in fact, this is the first podcast I'm letting everybody know. It's called askmultifamily.com. It's askmultifamily.com. This is a forum that is going to archive all discussion about multifamily. You can ask anything you want. Everything is going to be archived. You can search topics as well. It's free. You just go in and log in, and it's not linked to any group. So there's no walls in these Facebook groups. Every group has a wall.
Yeah, right.
Even though, as per whatever people preach, it's abundance mentality, right? You should share all your knowledge with everybody, right? But still people have wall, right? So this is no walls forum. Anybody can come and join. Anybody can ask questions. And all the questions with answers will be archived, and it's very powerful. So I've been playing with it, and I'm starting to get people to ask questions, and I'm going to be sending out mail to my network, and hopefully whoever listens to this podcast will be able to use that.
Yeah, awesome. Well, thanks for that. And I'll definitely check it out myself. That's askmultifamily.com. We'll link that in the show notes for our audience members to go find and to check out. So really cool stuff. And I look forward to seeing what comes of that, James.
Yeah. I'm excited to see what comes out of it. But it's my experiment to see, how do I archive all these questions that everybody's asking the same question, right? So
yeah, right. So awesome. All right, James, our next question is, what book would you recommend to the listeners and why?
Think and Grow Rich. It's all about mindset and how do you control your subconscious mind. And I mean, a lot of people loves that book, and I would recommend that. It's basically how you change your mindset.
Yeah, I love it. That's Think and Grow Rich by Napoleon Hill. We'll link that book in the show notes for our audience to pick up if they want to check it out. So, James, last question here. If you were to give advice to your 20-year-old self to get started investing in real estate, what would you tell you?
Start buying. At least start buying single-family homes or anything on real estate, right? Start learning real estate. The longer you do in your lifetime, the more wealth that you're going to generate, right? Unless you're flipping and you're having for short term. But real estate is for long term, and I'm a buy and hold guy. I'm not a seller. So if I would have started early buying even a one single family home, I would have been much more richer right now.
Yeah, I love it. Well, James, as we're wrapping up here, if the audience wants to continue this conversation, reach out to you, ask you any questions, or just connect with you, where's the best place for them to do that?
My website is called Achieve Investment Group. Achieve is ACHIEVE, investmentgroup.com. And my email address is james@achieveinvestmentgroup.com. So I usually respond to my emails pretty diligently. So that's the best place to reach me.
All right. That's achieveinvestmentgroup.com. And if you want to reach out to James and continue this conversation, ask him any questions, just, I'm sure he'd be happy to hear from you. So that's james@achieveinvestmentgroup.com. James, thanks so much for coming on the show today. It's been a great conversation. We look forward to speaking with you next time.
Awesome, Jacob. Nice chatting with you. And thanks to the audience for listening to me.
Yeah, James, thanks so much. Take care.
You've been listening to the Real Estate Way to Wealth and Freedom podcast, providing you actionable content to build your real estate empire. Nothing on this show should be considered specific, personal, or professional advice. Please consult an appropriate tax, legal, real estate, financial, or business professional for personal advice. The opinions of guests are their own. Information is not guaranteed. All investment strategies have a potential for profit or loss. The host is operating on behalf of the Real Estate Way to Wealth and Freedom, LLC exclusively.